Hello everyone, we are the group number 5 and we are assigned to tackle today's topic that is all about World Trade Organization. Have you ever heard about this World Trade Organization and what they are doing? At the end of this lesson, we want you to learn about it and what's really important about World Trade Organization. So what's World Trade Organization? Is it about the world only? Or the trade only? Let's divide the three words that make the WTO. Let's start with the word world. When we say world, we mean to say the earth. But what's inside the earth? Of course, it's the country, continent, people, and nature that live in it. So basically, it's the place where we live. How about the second word? The trade. Trade is all about buying and selling goods. When we go to the market, or mall, or even shop online, we're already practicing trading. Now for the last word, the organization. Organization is all about group of people that work together for a specific goal. Whether it's group of people who wants to create a business or product. Just like what we join in our university. A good example for that is JMA. Now that we know what's the meaning of the words that create WTO, what's World Trade Organization really means? World Trade Organization is a member-driven organization as all decisions are made by the members of the government. All the rules are the outcome of the negotiations between members. And the World Trade Organization is the only global international organization dealing with the rules of trade between nations. But who created the WTO? And why they created it? At first, WTO doesn't really exist. Instead of WTO, we have the General Agreement on Tariffs and Trade, or GATT. GATT was part of the Bretton Woods-inspired family, including the International Monetary Fund and the World Bank. GATT was created in 1947 in the expectation that it would soon be replaced by a specialist agency of the United Nations, to be called the International Trade Organization. Although ito didn't really make through, GATT proved remarkably successful in liberalizing world trade over the next 5 decades. By the late 1980s, they wanted to have stronger multilateral organization to monitor trade and resolve trade disputes. And that's when WTO began operations on January 1, 1995. There are a lot of countries that are members of WTO that even I get able to enumerate. But I can enumerate those countries that are not members.
Wait, there are countries that are not member of WTO?
Yes, my friend, that pops up somewhere that I don't know. There are countries that are not included in WTO. These are Aruba, Eritrea, Kiribati, Kosovo, Marshall Islands, Micronesia, Monaco, Nauru, North Korea, Palau, the Palestinian territories, San Marino, Natuna. Again, San Marino, Saint Martin, and Tuvalu.
Why they are not included?
There are some factors and also criticism against WTO that we all know we can't avoid.
Like what?
Like, for example, free trade benefits. Developed countries have more benefits than those developing countries. And also, the most favored nation principle of WTO that we will tackle later. Now let us all go for WTO's functions. Starting with, administers WTO agreements. When we say administer, it is all about managing something, which means that WTO manages the agreements that each country agreed that are members of WTO. Next function. WTO also serves as a forum for negotiations. Because WTO is given as an organization that holds a lot of members, it is also given that they can be used as forum for negotiating like settling disputes and reduce trade tensions between countries. That is connected to our next function, which is handle trade disputes. Most state-to-state disputes are handled by the WTO system, the primary body governing for international trade. For example, Philippines wants to trade their furnitures made of bamboo to England, but they didn't agree with the tax and price. That's when WTO comes and negotiate what's the best thing and solution for Philippines and England that both countries will agree to. Monitors national trade policies. World Trade Organization also checks what is the national policies and also check if the countries are following or not. If not, this certain country who violates the policy will receive a punishment. But WTO is not just handling disputes, but also provides technical assistance and training for developing countries. For the last function, it is all about cooperates with each international organization. WTO also talks and communicates to other international organizations like IMF and United Nations. Next, multilateral trading system. Multilateral trade agreements are commerce treaties among 3 or more nations. The agreements reduce tariffs and make it easier for business to import and export. Since they are among many countries, they are difficult to negotiate. So with the help of multilateral trading system, these countries that have difficulty in trading will have standardized import and export procedures, giving economic benefits to all member nations. In WTO, they have agreements on how they will apply or do multilateral trading system. It is negotiated, signed, and ratified. All countries that is a member of WTO will have a say if 2 or more countries have a problem in terms of trading. Let us use the example earlier, between Philippines and England. The conflict is just between 2 countries, but that doesn't mean that only both of them can have a say with the problem. Other countries can also give their own opinion or solution, and the other countries can also vote if that's effective or not for both Philippines and England. That's the negotiation. And if they come up with an effective solution that all of the countries agreed to, that's when the plan is signed and ratified. Now, let's go for the next part. Most favored nation status of WTO. WTO's most basic principle is non-discrimination, meaning that countries should not discriminate other countries in terms of trading their goods. Grant someone a special favor, such as lower customs duty rate for one of their products, and you have to do the same for all other WTO members. But as I said earlier, there are complaints that this kind of principle only applies in developed countries, and developing countries are left behind with it. Most favored nation of WTO have advantages and disadvantages. Like yes, it gives them access to the larger market. But the country must also grant the same trade benefits to all other members of the agreement or the World Trade Organization. Like for example, if the Philippines is granted to have a low tax in terms of our product importing to other countries, we need to do the same whether if that country is already developed or not. Now that we're done in WTO's meaning and function, let us listen to Ms. Rosalinda Tumanda for its disputes and trade policy.
So let's talk about the WTO Dispute Settlement Body. Resolving trade disputes is one of the core activities of the WTO. A dispute arises when a member government believes another member government is violating an agreement. The next is the Trade Policy Review Body. Is a subsidiary body of the General Council created by the Miraski Agreement establishing the WTO administer the Trade Policy Review Mechanism.
In other words, Trade Policy Review Body is a forum of the entire membership to review the trade policies of member countries.
Trivia time! Did you know that the Philippines became a member of WTO on January 1, 1995? So far, the country has filed 4 disputes. One of these disputes was the complaint of the Philippines on the countervailing duty imposed by the Brazil on Philippine exports of desiccated coconut.
Wow! Didn't know that Philippines filed that kind of disputes, huh? Now, I know all of you want to learn more. So here's Mr. Renzo Jose to explain the next lesson for everyone.
Formation of trading blocks. Efforts are undertaken by some countries to facilitate trading among themselves. Indert and Kindleberger, 1982, have identified 4 different types of trade blocks, namely free trade area, customs union, common market, and full economic union. First is the free trade area. In this, all trade barriers among members are eliminated, which means that they can freely move goods and services among themselves. Example of this is the European Free Trade Association. It was historically one of the 2 dominant Western European trade blocs. Free trade area consisting of 4 European states: the Iceland, Liechtenstein, Norway, and Switzerland. Second is the Customs Union. It is an arrangement among countries in which the parties do 2 things. First, agree to allow free trade on products within the customs unions. And second, agree to a common external tariff with respect to imports from the rest of the world. Third is the common market. In this, countries also allow free trade and free movement of labor and capital among the members of the group. Example of common market is the European Union. Its policies aim to ensure the free movement of people, goods, services, and capital within the internal market. Another example is the Central American Common Market, or the CACM. It is an association of 5 Central American nations, namely Costa Rica, El Salvador, Guatemala, Honduras, and Nicaragua, that was formed to facilitate regional economic development through free trade and economic integration.
For economic union and foreign exchange, here's Ms. Maria Ella Mejiron that will help us explain all about it.
Full economic union. An economic union is a type of trade bloc which is composed of a common market with a customs union. An economic union is an agreement between 2 or more nations to allow goods, services, money, and workers to move over borders freely. Foreign exchange or forex is the conversion of one country's currency into another. A currency's value can be pegged to another country's currency, such as the US dollar or even to a basket of currencies. How does foreign exchange work? Does not operate in one particular place as stock exchanges do. Anyone who buys or sells a particular currency is accessing the forex market.
For IMF, we have Ms. Nori Laus to explain it out.
Now let's talk about IMF, or the International Monetary Fund. The IMF was conceived in July 1944 at the United Nations Bretton Woods Conference in New Hampshire, United States. Its primary mission is to ensure the stability of the international monetary system, the system of exchange rates, and international payments that enables countries and their citizens to transact with each other. Let's briefly talk about its origin. It was back in the first half of the 20th century, that is, marked by 2 world wars that caused enormous physical and economic destruction in Europe, and the Great Depression that brought economic devastation in both Europe and the United States. These events kindled the desire to create a new international monetary system that would stabilize currency exchange rates without backing currencies entirely with gold, to reduce frequency and severity of balance of payments deficits, and to eliminate destructive mercantilist trade policies, such as competitive devaluations and foreign exchange restrictions. That's when UN Monetary and Financial Conference in Bretton Woods takes place in July 1944. The 44 countries that is present at the said conference sought to build the framework for international economic cooperation and also to avoid repeating the competitive currency devaluations that contribute to the Great Depression of the 1930s. So the delegates representing 44 countries drafted articles of agreement for a proposed international monetary fund that would supervise the new international monetary system. And after approved formally by 29 countries, the articles of agreement entered into force on December 27, 1945. The IMF commenced financial operations on March 1, 1947. Today, IMF membership embraces 190 countries, with staff drawn from 150 nations to secure international monetary cooperation, to to stabilize currency exchange rates and to expand international liquidity. Let's move on to the general activity of IMF. Since its creation, the IMF's principal activities have included stabilizing currency exchange rates, financing the short-term balance of payments deficits of member countries, and providing advice and technical assistance to borrowing countries. So the IMF was created to help stabilize the exchange rates in the fixed exchange rate system. In particular, member countries contribute reserves to the IMF, which is then enabled to lend money to countries suffering balance of payments problems. IMF continues to provide short and medium-term financial assistance to member nations that run into temporary balance of payments difficulties. The financial assistance usually involves the provision by the IMF of convertible currencies to augment the afflicted members' dwindling foreign exchange reserves, but only in return for the government's promise to reform the economic policies that caused the balance of payments problem in the first place. And technical assistance is a major activity of the fund. Staff officials are sent to member countries, sometimes for extended periods, to give advice on stabilization programs, the simplification of exchange systems, the modification of central banking machinery, the reform of fiscal system and budgetary controls, or the preparation of financial statistics. The fund collects and publishes a constant number of statistics supplied by members.
Our presentation is coming to an end. And for the last topic, we have Ms. Nika Machon to tackle the lesson.
There are three types of specific activities of IMF. There's surveillance, technical assistance, and lending. Let's start with surveillance. When a country joins the IMF, it agrees to subject its economic and financial policies to the scrutiny of the international community. It also makes a commitment to pursue policies that are conducive to orderly economic growth and reasonable price stability, to avoid manipulating exchange rates for unfair competitive advantage, and to provide the IMF with data about its economy. The IMF's regular monitoring of economies and associated provision of policy advice is intended to identify weaknesses that are causing or could lead to financial or economic instability. This process is known as surveillance. There are three kinds of surveillance. Country surveillance. A country surveillance is an ongoing process that culminates in regular, comprehensive consultation with individual member countries, with discussion between as needed. IMF staff missions also often meet with parliamentarians and representatives of business, labor unions, and civil society. Regional surveillance. A regional surveillance involves examination by the IMF of policy pursued under currency unions, including the Euro area, the West African Economic and Monetary Union, the Central African Economic and Monetary Community, and the Eastern Caribbean Currency Union. Global surveillance. A global surveillance entails reviews by the IMF's Executive Board of Global Economic Trends and Developments. The main reviews are based on the World Economic Outlook reports, the Global Financial Stability Report, which covers developments, prospects, and policy issues in international financial market, and the Fiscal Monitor, which analyzes the latest development in public finance. Technical assistance. The IMF shares its expertise with member countries by providing technical assistance and training in a wide range of areas such as central banking, monetary and exchange rate policy, tax policy and administration, and official statistics. The objective is to help improve the design and implementation of members' economic policies, including by strengthening skills in institutions such as finance ministries, central banks, and statistical agencies. Lending. A country in severe financial trouble, unable to pay its international bills, poses potential problems for the stability of the international financial system, which the IMF was created to protect. IMF loans are meant to help member countries tackle balance of payments problems, stabilize their economies, and restore sustainable economic growth. This crisis resolution role is at the core of IMF lending. At At the same time, the global financial crisis has highlighted the need for effective global financial safety nets to help countries cope with adverse shocks. A key objective of recent lending reforms has therefore been to complement the traditional crisis resolution role of the IMF with more effective tools for crisis prevention.
Now let us do a short recap for today's lesson. The World Trade Organization, or WTO, is the only global international organization dealing with the rules of trade between nations. The goal of WTO is to help the producers of goods and services, exporters, and importers to conduct their businesses. The multilateral trade agreements are commerce treaties among 3 or more nations. A customs union is an agreement between 2 or more neighboring countries to remove trade barriers, reduce or abolish custom duty. While a common market is a formal agreement where a group is formed amongst several countries that adopt a common external tariff. While an economic union is an agreement between 2 or more nations to allow goods, services, money, and workers to move over borders freely. Foreign exchange, or forex, is the conversion of one country's currency into another. And the IMF. The IMF keeps track of economic developments on a national, regional, and global basis, consulting regularly with member countries and providing them with macroeconomic and financial policy advice. Remember, IMF have 3 specific activities. It is surveillance, technical assistance, and lending. The video ends here, and if you are still watching up to this point, well, congratulations! I know you just learned something, and I am sure that it will be very useful to you. I'm Penelope Alcaraz, the last member of Group 5. Thank you for watching!